Thank you very much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour after last week's dip and yesterday's rip. Where does that leave this record-setting rally? We will ask the committee. Of course we will. We'll debate it as well with Joe Terranova, Stephanie Link, Shannon Sakosha, Josh Brown. Take you to the markets here. We're trying to figure some stuff out today. Obviously, Dow's green. Everything else is in the red. Steph, I'll come to you first. So we had the big decline. We had the big bounce. Goldman's Tony Pasquarello says when down 3% constitutes the worst week in 7 months. You know the getting has been very good, and some consolidation was perhaps to be expected. In the time since, market behavior is encouraging. In textbook fashion, the 50-day moving average was tested and held. I'd argue the technical setup is better today than it was a few weeks back. Feel the same way?
Yeah, I do, actually. The S&P 500 is up 36% from the April 8th lows, Liberation Day. We're up 16% year to date. We were supposed to have volatility in September and October. Instead, we had 3% growth in September, 2% growth in October. November is our volatile month. High expectations, right? Volatility is expected when you have this kind of expectation level. That being said, the economy is growing at 4%. It is not all AI. It is also supported by some parts of the consumer, which is hanging in, especially the high end.
Tiny. Some part, tiny, like, which part?
High end is the bulk.
Hold on, let me see if I can see through which part.
Okay, stop. Okay, so we're going to get to the consumer in a little bit, but the consumer's hanging in because they do have jobs and wages. Inflation is down, all of that. That also being said, productivity growth is running up 3%. We haven't seen 3% productivity growth, Scott, and I don't even know how long. That is very, very bullish, not only for productivity itself, but also inflation. And the Fed is cutting. I don't know how much more they're going to cut, but they're cutting. QT is ending. Earnings are growing 12.3%. Historical average is 5%. Revenues are growing 8%. Historical average is 5%. So things are pretty good. We should be up this much. We should have rallied from the lows. But I think seasonality plays a very big, important part right now. Between now and the end of the year, on average, fourth quarter grows 8.5% cumulatively. You want to be long. You want to be buying the dips. And that's what I was doing last week.
All right.
How's that?
That was pretty good.
Mic drop.
That was good.
Is she dead on?
Well, for sure, the market has very strong tailwinds. It's had these tailwinds ranging from global central banks being accommodative to the degree of which we haven't seen in decades, disinflationary trends, and the earnings growth. Maybe the earnings growth for 2026 is a little bit aggressive. We've had 4 consecutive quarters of double-digit revenue growth. You haven't seen that since 21. And now the estimates for 26 look like we're going to get that double-digit revenue growth again. I'm not necessarily sure that we do that or that we get the double-digit earnings growth. But I think where we are right now with the market really is about 2 things. Number one, we're skating towards the end of the year. Everyone's going to chase. We've talked about that. Everyone knows. Secondarily, it's a technology story.
Yeah.
And what do you do with your technology positions? And also, thinking about your technology positions, how important is it to understand that what you hold in your technology positions has the potential to be a source of liquidity in 2026 if markets feel as though they need to correct? And I think that's the single most important exercise you could be doing with your portfolio right now, is understanding, am I maybe a little bit too overweight or too long in the direction of technology?
Well, I mean, so yesterday we added $618 billion in market cap to the mega caps, most of the mega caps. And you can include Oracle and Palantir, Broadcom in that cohort of stocks I'm talking about. Those 8 stocks lost $800 billion in last week. So when the market had its upset, it dropped all that market cap, it gained it back. You have reasonably mixed performance over the last month for these names, though, Alphabet, Amazon, Apple, and Nvidia, of course, higher. Shan, Microsoft and Meta are lower. And we're going to get to a big story of a big seller of Nvidia in just a second. You lose $800 billion in market cap in these names. The trend is still very much with these stocks, and that's why you add more than $600 billion back. Nvidia yesterday, the best day since April 9th. Alphabet, best day since September 15th. Palantir, best day since April 9th as well. Any big drawdown in these names, and you can put big in quotes, I mean, you can quantify what you think that is going to be bought. We've seen it time and time and time again.
Yes. What's different now is that the market is separating the companies whose AI CapEx strategy is explicable from those where it's a little bit murkier how this is all going to pay off. And last week, we spent a little bit of time on the show talking about that dichotomy between Alphabet and Microsoft and Amazon now, where there's a concrete understanding of hyperscaler spend and the payback that you're getting on the other side from the enterprise customer versus a Meta, which I know we just talked about, where people aren't quite sure where that payback's going to be. They sort of understand that the Reels product and some of their ad units are becoming more and more efficient, and that's great, but like the overarching strategy is just less obvious or maybe now in doubt. And so it gets a little bit tougher. And I think in the case of the NVIDIAs, the Microsofts, like we all sort of understand, okay, this is the opportunity and this is why there's future earnings attached to it. So that's one component of this, and I think it's really important. The second component of this, and when we think about that broadening, it's either AI or not, it almost doesn't matter. You're going to see this continued melt up. You will see the CapEx darlings continue to work, but you're also going to see things that really we don't talk about on a daily basis. But like I'm looking at my best stocks in the market list right now. I have Estee Lauder on my list. Their AI strategy is non-existent. It's not important. This is a stock that's growing earnings. You look at Amgen, you look at CVS Health, Archer Daniels Midland, Rocket Companies, which I'm long, 3M, which I'm long. These names, they're not AI trade. We're in a bull market, and there are just so many different ways to play. Of note, the commodities trade is starting to have a resurgence. Look at Anglo Gold Ashanti, which we talked about as a buy on the dip candidate. Take a look at the energy stocks. ExxonMobil got kicked off the list in September. Looks like it's about to pop back on. Phillips 66, which I'm long. That stock's breaking out as we speak. So it's not AI or not AI, and there's only one thing worth doing. There are a lot of stocks in uptrends with great technical setups, and I think the most important thing is not doubling down on the names that are falling apart, the DraftKings of the world. I think it's really important that we're using stops and we're riding the best stocks in the market, and we get into this year-end melt-up period. They should continue to work.
Well, SoftBank rode what certainly has been one of the best stocks in the market, NVIDIA, selling it, the entire stake they had for near $6 billion. They're going all in on OpenAI. That's the whole point. They use the sale to fund the all-in bet on OpenAI. Time for everybody to kind of take a look at their NVIDIA position, see how big it is, see where other diversifying efforts may be lucrative in the months, if not years ahead. What do you think here?
Well, the one word that I heard was liquidity. I have no problem with the fact that he's selling. They had their best quarter in the third quarter since December of 2005. I think they're up on the year about 200%, or rather up in the last 6 months, 200%, up about 140% year to date. So no problem that he's ringing the register, but he's doing that to raise liquidity. And that goes back to my initial remarks. I think when you look at your technology positioning, you have to say to yourself, am I over-levered? Am I extended in a position where it could be potentially a source of liquidity? So yes, in fact, I think that's absolutely the exercise that you should be undertaking. Do I think right now you reach for an NVIDIA? Do I think you reach for Amazon and the Mag 7? If you don't own them, I don't. I don't think this is the moment to buy them. I think if you own them, you stay with the position, and underneath the market, you manage your risk with some form of a stop. I think that's the right way to think about it. And Josh has identified, Stess has spoken about it over the last several weeks, there are other places that you could go in the market with that capital.
But you feel like it's a reach to go after these stocks now?
Yes, I do. I think right here, right now, there's no reason. Look, if you've missed NVIDIA and it's trading 192.90, really this is the moment you're going to get into it? You don't think in the next 6 months or the next 9 months you're going to get a pullback and a better opportunity? I wouldn't chase it here.
In the past.
No, I would not chase it. I would not chase these stocks here. I think it's important to understand what they have done in the last 6 months in terms of earnings and price appreciation.
Right.
And I think at a certain point, Scott, you have to be a little bit judicious.
Well,
Maybe not NVIDIA, but I think something like Meta that's down 16%
but that's
in 2
correct.
weeks.
That's correct.
And so that's the one I've been buying. I actually added a new position in Microsoft. It wasn't barely even down after they reported earnings, but I mean, they knocked the cover off the ball. They had commercial bookings up 111%. They beat across the board. They had better than expected cloud revenue in terms of sequential. So I think there are places where you can add, maybe not NVIDIA. By the way, maybe not Broadcom, which you know I own, right? That's had a really nice run. It's barely corrected.
Maybe
but
you get your chance in NVIDIA in 8 days. Who knows, right? The earnings report, right? You got to wait and see what happens.
You could, but then there's other ways to play AI too. And we've talked about the industrial companies, the Quanta Services, the Eatons, the Rockwells, the Vertivs.
I know. I feel like everybody knows about those, though. You don't think those are in some ways as stretched as some of these other names from the hyperscale thing? It's not like we're discovering this, as new.
Retail does not know these names. I go out on the road all the time and talk to advisors and their clients, and they're like, "What? Quanta? What?" So Eaton, what? Vertiv, maybe, because Dave Cote has done such a brilliant job. But I think that's the places where their numbers and the estimates are still much more inflecting higher. And I think SoftBank is the move today is an absolute endorsement of AI, and you absolutely want to find other ways to play it, maybe less obvious ways. And I don't think the industrials are obvious.
There's the other idea. Josh, I'd like your take on this, on what Michael Burry has posted again. Not posting the same thing again, but just the fact that he's posting again. And I say that because, you hear from him occasionally, of course, from 2008 housing crisis fame. But he's been on a run lately of posting about, potential bubbles in the whole AI stratosphere. And he has another one today where he essentially says that the hyperscalers are overstating their earnings. And and you need to understand this through depreciation. I'm not going to read the whole post. You can go find it if you want, but he just calls into question where we are in this particular trade. I don't think we need to go through the forensic accounting of how these companies are working out their numbers, but the idea that he's back in a big way calling out what he clearly sees as overextended stocks.
So what I would say is that the conversation is now shifting from these stocks are in a bubble because they're expensive to these businesses are doing something that is deceptive to investors. I think for most people, that's a bridge too far. They're not hiding their numbers. They're just accounting for depreciation of some of the CapEx spending that they're doing. I think the most important thing for investors to consider is the fact that what Burry is pointing out are all public data points. Everyone is looking at the same numbers. Now, does he have something planned that maybe nobody is aware of, or?
Well, he says more detail coming November 25th. Stay tuned. Okay. I don't know what that means, but we'll have to wait a couple weeks.
The bears would say we're in this toxic stew of companies that are deliberately misleading investors via the ways for which they're accounting for their CapEx spending, and combined with elevated valuations. The bulls would say, we understand the spending that they're doing, how they're paying for it, how they're expensing it, and not only are these companies not expensive, if these earning streams come through as a result of the investments that they're making now, 2 years from now, 3 years from now, some of them might actually be too cheap. That's the battleground. And it's very difficult to convince somebody on one side to switch over to the other. There is, however, the potential for current AI bulls to become afraid. It's not going to be based on news. It'll be based on price action. So if you see these stocks start to break down technically, then all of a sudden, these nightmare tales that are being told will gain more adherence and more belief. But to me, the technicals will signal if and when that's going to happen. I think for the most part, most investors understand that we're in sort of a new paradigm, and new paradigms do get people nervous. And the new paradigm that we're in right now is, for 10 years, we've celebrated these companies as being two things: low debt, very huge cash positions, and asset light. That's been like the buzzword. Oh, they're asset light. You can't compare them to the conglomerates of the 70s and the 80s. I don't think the bulls could say either of those two things anymore. I think the bulls now have to admit it is a new paradigm. These are no longer asset-light companies. Now, you might say, with good reason, they should be building all of these facilities and all this infrastructure. Okay, that's an argument. You also can't say that they're low debt because they're anything but. The amount of debt capital coming into the system to finance these projects is unprecedented. So it is a little bit of a turn in the way that we think about these companies. I'm looking forward, like everyone else, to see what Dr. Berry will be revealing.
Yeah. I mean, the whole idea of raising debt to help finance the build-out is definitely getting more attention. We've now been hearing about it almost every day, whether a news story or a note from the street. Anything to see here?
Yeah, I think tech issuance around investment-grade corporates, that's been a big part of corporate investment-grade portfolios over the last number of years. It's been a high free cash flow, strong balance sheets, to Josh's point. I think our concern is that credit investors actually push the scrutiny on some of this investment maybe faster than equity investors do, because now we're starting to look at things like weighted average cost of capital, return on invested capital. These aren't things that these companies were ever asked to do.
Kind of like Josh is talking about, the way you look at these maybe has to change.
And the
aperture has to be open a little bit wider to see more of the picture.
Right, and the overarching quality of tech issuance could come into question over the next year, as there's just so much of it, and there's so much capex going into the ground.
I actually think it's more dangerous than just the impact on how we rate these stocks. I think there is a large and growing segment within my industry, the wealth management industry, where a lot of financial advisors have been rallied to this flag of the new 60-40 is 60-20-20, and a lot of them have been incentivized to start retailing private credit products that perhaps they don't fully understand or are so new that we have not seen them through an actual economic cycle. Remember, it's been 15 years or so since we've actually had a traditional recession or economic cycle. And now what ends up happening is you think you're diversified because you're 60% stocks and it's not all Mag 7 and blah, blah, blah. But then within the fixed income piece, you've bought so much product that your branch manager or your complex manager told you to buy. And then you realize, oh my God, I have equity risk on the Mag 7 and this whole AI theme, fine. But look, now a decent sized portion of my corporate bonds or my fixed income is also at risk based on the same premise of this AI build out. I'm not suggesting like people put 20% of their clients into private credit products that are building data centers, but it's definitely more than it's ever been before. So I actually think that there are some risks being taken out there by people who are supposedly fiduciaries, and maybe not all of those risks were wise in the context of a retiree's investment portfolio.
Here's what I think is interesting. We've heard a lot in the last several weeks about AI stocks using the debt market. What's the response to that? What's the market reaction to that? Perfect example, obviously, is Oracle. Now, you could make the argument, and it's factual to say, that the demand for the investment-grade bonds that they offered was remarkably strong. You could also say that it's a small amount of capital that they're raising relative to their overall size. But what it does is it blunts the sentiment. And that's always important. You always look at positioning and sentiment. It blunts the sentiment because we're so sensitive to what happened in the 90s. And immediately you say to yourself, here's a company who has a debt-to-equity ratio of 525%. I'm looking at that in front of me. And now, what does that mean? That means potentially they're going to be utilizing more debt. That's damaging to the story that we've heard for the last several years that said, no, these companies are using cash from operations to fund the innovation. The story changes, and so does sentiment.
You know what
and
else?
The reaction
sentiment?
Is a sell-off in the stock like Oracle.
Like if you look at last week, what else dents sentiment potentially? Talking about bailouts and backstops.
Absolutely.
Okay, So that you put all of that into the mix, and that probably led to some of the volatility and the unease in this space last week.
I think there's fatigue. I think there's a degree of exhaustion surrounding all of these agreements we're hearing with OpenAI. I kind of wish that OpenAI, maybe for the next month or so,
become closed AI.
Yeah,
right. Become
exactly.
closed AI.
Exactly.
Just like
perfectly stated.
Just like dial it back.
Yeah, it's
Make
too much.
you happier.
We're fatigued.
All right, so we're gonna take a quick break. All right, pretty nice day, at least for the Dow, 370 as you saw. And Stephanie Link, let's get to these moves. The Linkster looked at Starbucks down 26% from its March high, and said, "I want some lattes."
Yes.
You bought it.
A little caffeine for the portfolio.
Okay.
So when Brian Niccol was announced to be the new CEO from Chipotle to this company, the stock went up 49%. It is round tripped. It's given it all back. And we know what Brian Niccol did at Chipotle. Stock, when he was there, went up over 700%. He's an excellent operator. And I think this is a great opportunity to get in now, because they saw the first positive same-store sales number this past quarter, the first one in 2 years. And even on TV, on CNBC, he was on and he said the turnaround is happening faster than expected.
I saw that interview.
Yeah, and so he's revamping. He's revamping the store experience, the mobile operations, the menu changes, and he's simplifying. And I think you're starting to see better traffic trends as a result. So
what happened? Let me stop you. I'll come right back to you.
Yeah.
Why did the stock round trip? Was it the euphoria of Niccol?
Well,
and then it was like, wow, this is going to be a lift. So woo, we come all the way back around, and now it's like, let's see what you got. Like, show me.
100%, and that's why I thought it was interesting that comps inflected positively for the first time under his leadership. That's pretty fast. Turnarounds take a lot of time, and I think everyone got very euphoric, and then he delivered kind of so-so quarters. But this was the first one that I thought was the most interesting. And not only that, but his body language was better, the tone was better. And so I just think this is a great setup for 2026. And I know you're going to ask me why I sold Target, or some of Target, most of Target, by the way.
Yeah, I was going to ask you why you own any of it.
Because, well, I don't know. We'll have to see next week when they report earnings.
You didn't
if we get a
anticipate that
rally,
one.
I'm not.
You thought I was going to ask you something. I was going to ask you something else.
Well, the point being is that I don't have a lot of cash, and I much prefer this management team. I much prefer this story, this valuation versus Target. Now, I didn't sell all of Target because it's still so incredibly cheap, but it's been a disappointment. And
you
I
have
think
not liked this stock for a long time.
I know, and I probably should have sold it when they announced the new CEO, because he was an operations guy. But I thought an operations guy at the company for 25 years could make a turn quicker at Target. We'll see what they do, but I just prefer having a much smaller position here, and I'm going to slowly add to Starbucks over time.
Okay. I mean, the consumer, let's be clear. It's like the high end is doing well. Those who have made a good amount of money in the stock market are feeling great, and they're spending their money. Kind of everybody else, not so much, right? If you look at the commentary from earnings season from consumer-related companies, it's kind of startling how many have been kind of bad. I mean, I can't read the whole list because it'll literally take me too long to do it. But Cheesecake Factory, their comps missed. Cava, the comps missed. They cut their guidance. Chipotle comp missed. Carter's guide was soft. What else? Kraft Heinz, Mondelez, they both cut their outlooks. What do we do with that? Restaurants aren't great, right? I mean, they haven't been great.
No, they haven't been great.
At all.
I sold Chipotle. It was horrible. 3 quarters in a row. This new CEO is supposed to turn around the story, and he's not turning around the story.
Well, he can't put money in people's pockets.
But this is the point. This is the point, that you go with the best of the best, and Brian Niccol's the best of the best, and I'd rather put my eggs in that basket than the Chipotle basket. I disagree with one of the names on this list, and I'll tell you why. Deckers, while I sold it.
Well, Hoka missed.
Hoka missed. But they didn't miss, actually. And they're growing double digit. And UGGs are growing double digits. It was their guidance that was conservative. I sold it to be able to fund some of the other things that I was adding to at the time. I would absolutely revisit that story
you have seller's
in
remorse.
2026. I do, actually. To be honest with you, I really do. But I don't think it's going anywhere between now and the end of the year. I think it could be another good 2026 story, like I think Starbucks can. Now, in terms of the low-end consumer always feels the pinch, unfortunately, one way or the other. Inflation, wages, job availability, etc. It's the middle tier and the upper tier that does the maximum amount of spend here in this country, and we spend. And I have a stat for you. The National Retail Federation came out and said they expect holiday spend this year to be $1 trillion. And the average consumer is going to spend $900. That's the second highest in 23 years.
How much of that comes from having to spend more because of tariffs?
No, I don't believe that at all. I think it's actually the pent-up demand in terms of wanting to buy, for sure.
You don't think you're going to have to pay more for the Barbie doll?
Possibly. I don't know. We haven't seen massive price increases, though.
Oh, we've seen someone like stuff like that.
Some, but not massive price increases. No, I think this is going to be a good demand story because I think, again, the consumer has jobs, they have wages, inflation has come down, interest rates are coming down. You mentioned it. They have investments in the market. They also have higher home prices if they own a home. So the confidence levels I kind of just put to the side. I know they haven't been good, but it's the action that we're seeing. And our consumers in the United States, they spend. We are a nation of spenders, whether we have the money or we take on the debt. We just do.
Steph's got the deflection dome around everything I try and throw at her. Comes right. She's ready to throw it right back.
Can I turn it around on consumer businesses for next
Real quick.
year? Tariffs are going to come down. They're going to be more prescriptive. This is going to be better for earnings on the consumer side. It doesn't have to be just a demand story. It can be a supply story.
All right, Kate. All right, welcome back. The Josh Brown spotlight is so bright today that it is shining on 3, not 2, 3 stocks on his best stocks list. Tell us more.
Yeah, and I'm going to try to keep this concise because I want to make sure we get to all 3. Bottom line is this is a tailwind that's probably secular. Countries around the world are arming and rearming like we haven't seen in decades. The United States will spend $900 billion alone this year, which is an all-time high. And we've got hot wars all over the planet. And it's unfortunate, but this is the world we live in. As a result, these stocks have had an incredible year in the aerospace and defense sector. I don't see that changing anytime soon. So let's talk about 3 of the names that are on my list of best stocks in the market. L3 Harris. This is probably the weakest chart of the 3, but still pretty decent. Snapped its downtrend this past May, has been a good soldier, held that rise in 50-day. I think this is the type of name that ultimately could play catch-up to the leaders. The leaders here are General Dynamics. Put up GD for me, guys. This chart is pristine. Acted really well throughout the fall. Look at the buyers. They're coming in on every dip. I think this name sees 375 before it sees 325 again. The risk management that we wrote about is the July gap, the low end of that July gap, 310 as a pivot point. So long as it remains above, I think you can ride it. RTX retested the low 170s. The buyers did not allow this stock to fall back into its recent gap. Very bullish action. Now it's bouncing off of the retest, picking up momentum. RSI is still in the high 60s, not overbought yet. And that 50-day, well, I mean, you can see it for yourself. You don't have to be a technician. Every time it gets even close, they come in right where they should, and they snap up the stock. I like these 3 names into year-end. They're in a secular bull market. I don't know what changes it. I just know buyers are coming into these stocks on every red day, and they all look pretty good.
Joe, you agree? You have General Dynamics,
yes.
You have Exxon.
Certainly on General Dynamics, I agree. And RTX, the momentum is clearly building. We don't own it, but it certainly looks pretty good at the next rebalance. Axon is the challenging one. We're in Axon, July of 2024 at around $300, so we've got some room here. But I've said on air, the momentum is lost here. It's broken down. Getting out below the 200-day moving average on Josh's part was prescient. That's the right move. We'll rebalance at the end of January, see where we are. If it's sitting where it is right here, I can't see that it survives.
Okay. Josh Brown, final trade today is what?
Phillips 66. We have a breakout in progress, as we discussed a couple of weeks back.
All right. Thank you. Shannon, what you got?
Emerging markets, China on the AI theme, everything else on improving global growth.
All right. The Linkster.
Aptiv Auto Parts, they have an analyst day on the 18th. We're going to learn more about the spin, which you know I like very much.
You do?
Yes, I do.
Yes, you do. Joe T.
An industrial name breaking out to a new all-time high, Parker Hannifin. I don't know if you like that one. They did an acquisition today.
Did they have a spin?
Nope.
She doesn't like it.
They bought for $9 billion. It's the leading filtration company in the world.
All right.
Spins work.
So what we got, 450? Yeah, we got better than 450 on the Dow. So we're trying to, and then now the S&P's positive too. I'll see you at 3 o'clock.
Hey everybody, welcome to Blue Cloud Trading. I'm George. It is Tuesday, November 11th, and it's 6:34 p.m. In this video, we're going to go over a number of stocks that they talked about on the halftime report today. That was Josh Brown and some other guests. Let's take a look at some of those stocks. I'll just show you a brief little quick synopsis here, and then we'll get into the markets in a few seconds. Number one, we're going to talk about the S&P 500, the QQQ, the Dow, the Russell, the Euro stocks. We're going to look at those. They were all up. The majority of them were. We're going to go over it. Are you ready for this? This is pretty crazy. 24 stocks and ETFs mixed up in here that were talked about. So it's not all of them, actually. They talked about more than that, but I'm going to go over 24 of them. And we'll do them, we'll basically just spend about, I don't know, 15, 20 seconds or 30 seconds on each one. It won't take that long for me to analyze them. Using this fantastic indicator, the Ichimoku indicator, I'm going to give you a quick synopsis on how that works too. We'll take a look at Apple, Tesla, Meta, Microsoft. We will also look at the sectors, the strongest ones, okay, with the little blue flag there. And we'll also take a look at a couple of requests from our members right there, those two stocks. So let's get started, folks. We're going to go ahead first, like I always do. I like to take a look at the market overall and see how did that do today. And you can see the Dow Jones. The Dow Jones was up 1.18%. It was actually up the most. You can see since the morning, it just moved up and then just continued moving up. So up 1.18%. The NASDAQ didn't do so well. It gapped down in the morning, okay? Dropped. And around 11 a.m. it started to recover, but it still stayed under the prior day's closing price. So it was down 0.25% today. Is this a sector rotation? Very interesting. We'll look at some of those stocks. S&P 500 also dropped in the morning and then recovered. This one was up slightly, 0.21%. Russell 2000 also dropped in the morning and around 11 a.m. moved up. It was only up 0.09. So these indices didn't do so well, but the Dow was up quite a bit. And let's look at the heat map real quick too. Here it is. In fact, if we can actually select the Dow Jones so you can see the specific stocks within the Dow. The only one that was down was Nvidia, down 2.96%. JP Morgan was down slightly, Caterpillar, Cisco down slightly as well. But the majority of the stocks were actually up, right? Johnson & Johnson was up, Apple, Walmart, McDonald's, Procter & Gamble, Nike, Microsoft, Walmart, you know, all of them, the majority were up. How did the S&P 500 do? Let's take a look at the heat map there. So looking at this, we can see that the healthcare sector was mostly in the green today. It was up quite a bit. Energy did well. Basic materials did well. Utilities did well. They were in the green. Real estate did well. Okay, consumer defensives did well. But like I said, the semiconductors took a little bit of a hit today. You can see some of the other stocks right there. What else? Google was up just 0.4. Meta was down 0.74. Tesla was down 1.26. Amazon was up 0.28. Apple was up 2.16. Oracle was down 1.94. Microsoft was up 0.53. Let's look at the groups and zoom in on those for a moment. So you can see that healthcare, yeah, big mover today, up 2.4%, the entire sector. Energy followed with a 1.2% move up. Consumer defensives and real estate, like I just showed you on that heat map there. Technology down 0.77% for the entire technology sector. Interesting. And this is the 1 week performance. Technology for the 1 week is down too, for technology down 0.55%. So let's get into the stocks now. We're going to start off with S&P 500. Start off with the index, ETFs, and then we'll get into the rest of these. Now, real quickly, how does this work with the Ichimoku indicator? Really simple. And the software that I'm using here is called TC2000. All right, it allows you to add all types of indicators. You hit the little plus sign right there. You can see them all in here. And you just select Ichimoku Cloud. All right. It's unique. It has a cloud. You won't find that, I don't think, in many other indicators. And basically, It's comprised of 5 lines, okay? The 5 lines. And what are they? They're all right. Let's talk about those for a moment. And let me zoom in a little bit here. Make it a little bigger for you, okay? There we go. Now, we've got ourselves let's start off with the cloud itself. The cloud itself is constructed by taking the midpoint of these 2 moving averages and plotting that 26 periods into the future. That's called the Senkou Span A. The purple line, the Senkou Span B, is the other part of the cloud, okay? And that takes the midpoint of the last 52 periods, in this case 52 days, and then it plots that 26 periods into the future. The green line is the 9 period. It takes the highs and lows of the last 9 periods, divides it by 2. It's the midpoint of the last 9 periods. The red line, that's called Tenkan-sen, the green line. The Kijun-sen is the red line. That takes the midpoint of the last 26 periods, okay? And divides, so it's the midpoint of the last 26 periods and plots it right under the most current price, right there. So very unique. And then the last line is the Chikou span, the lagging line. Why is that in the background here? It's projected, it's basically today's closing price right there, projected 26 periods into the past, but instead of a candle, what you're seeing is a line. So it's a line form. And what you're looking to see is where's price today, which is that specific spot right there on the chart, in relation to the candle 26 periods ago. If that white line is above it, that's it. You know it's bullish. You're in a bullish territory. And if you look at the S&P 500 here on the daily chart, we've been above. Look at the Chikou span. I mean, it goes all the way back to April, Liberation Day, right? So once we got above the cloud, with price getting above the cloud, the Chikou span gave us some insight even, remember it's a lagging line. So we would have seen this popping above 26 periods in the future here. So we would have seen that somewhere around the point where it got above the cloud. That was the point right there. And since then, we've been up 17.48%. So it's been a nice move for the S&P 500. So it looks good still on the daily chart. Let's take a look at the QQQ ETF. Also looks very bullish. I've already analyzed this on the weekly chart. They all look bullish on the weekly charts as well. So that's why if you see a blue flag here, it means that they're strong on both the weekly and daily as far as the Ichimoku indicator is concerned, okay? So the daily chart looks good too. The Dow Jones, look at this, up 1.18%, but what a beautiful candle. The only thing is that the volume has started to come out of it slightly. There wasn't as much participation today as there was yesterday and on Friday. So here's Friday's hammer candle, right? Once we got the positive news about, the shutdown potentially ending. And then we got the follow-up yesterday on Monday, and here we are today on Tuesday, continuing. Now, we are coming to a level of resistance right about there, okay? So we're almost at that level, and once we reach that level, we might see the price stall, and we might see if it can pull back a little bit. If it breaks through that level, right, I think that's going to be really bullish, obviously, for the Dow. But yeah, it looks good. Up 1.18% today. FEZ is the Euro stocks. This is looking even more bullish. Why? Because we see the gap that took place there. So in overnight trading, this was on Friday. Here we were on Monday, gapped up again, a third time in a row. Okay. Now, it has also reached, in my opinion, a level of resistance. And you can see that red line there, the 63.60 level. It's actually based on this candle, but I think I'm going to actually move it up slightly because we do have a higher high right there at that prior high of October 28th. So that level is 63.70. So let's change that. When you have new information, you can, of course, change the levels of resistance. So now, instead of it being based on where it was back here, right, that was the prior high. This is currently the most recent high. And if it takes out that 63.70 level, I think that's going to be extremely bullish, all right? So that's what I'd be watching. Let me just go ahead and throw a circle around that permanent one. There we go. Let's keep going here. So now we've reached our level of resistance. In my opinion, I would wait until we get a candle closing above 63.70, because if hypothetically this starts to pull back now, you would have essentially created a triple top pattern. Okay, so that's something to pay attention to. And those are very bearish if price starts to reverse here. All right, Russell 2000. But remember one important thing. It's the news that actually pushes price in one direction or the next. So as long as we have more positive news, it's going to break through that level. Russell 2000, We had basically recently we had a crossover that positive. I'm sorry, the Tenkan-sen, the 9 period crossed into the 26 period, the red line, the Kijun-sen. That's bearish. Notice how we stayed under yesterday and we still are under the Kijun-sen today. It was only up 0.09. So this is the and it's been basically stagnant here. I would hold off on the Russell. Okay, the Russell is not looking strong here yet. The VIX is inside the Ichimoku cloud. You don't want to be adding positions, obviously, when the VIX is inside the cloud. But the VIX also represents fear and volatility. We want this to be declining. It's down 1.82%. And so when this is declining, usually the market does well. I like the fact that it's reached a 17.28 level here and continuing to decline. All right, now we're going to get into the stocks they talked about on the show. Here's Amgen. Look at this, drug manufacturers. By the way, that's one of the things I do in the members only video every weekend is I go over the strongest sectors and strongest industries. All right, and this is one of the ones that I've mentioned. And look at it, it's taking off like a bandit right now. So consider becoming a member. It's really easy to become a member if you're interested in getting a more in-depth analysis of the sectors, stocks and I usually give about 20 stock ideas for the upcoming week. And you can see the most recent video right here. I posted it 3 days ago. It's a 1 hour, 16-minute video. And I also go over my entire portfolio in this video. And in order to view this, you just need to, right next to the subscribe button. So remember, it's free to subscribe. Don't forget to hit the notification bell so you know when my videos are popping up. After you've done this free part right here, click the join button. This tab will pop up, this little box, and there are 3 memberships: Blue Cloud Supporter, Blue Cloud Trader, and Blue Cloud Legend. You can see that video under Blue Cloud Trader level membership, okay? You won't be able to see it here, but you would be supporting the channel. Lastly, the Blue Cloud Legend, what's this all about? Well, in addition to the exclusive member-only videos, you can also view some of the day trading videos I've posted, as well as daily trade updates on my trades. And I post those right next to the post tab. Once you've become a member, there'll be a new membership tab that pops up. I'll show you what it looks like. It will look like that right there. All right. And actually this, yesterday I showed a sample. So you might want to check yesterday's video if you want to see what a sample looks like. Alrighty, let's get back to the stocks now. Always got to do some marketing too, right? It's really important. Got to keep this channel alive and well and strong. Right? Important. Okay, so Amgen is looking good. There's a daily chart. There's a weekly chart. Here's Anglo Gold, Ashanti. I've basically put a blue flag for the top ones here. These are the strongest ones, and then I'll explain why the rest of these did not get a blue flag. Okay. AU, Anglo Gold, Ashanti Limited. Gold is starting to take off again. Look at the weekly chart here. Very bullish. We're back above the Tenkan-sen on the daily chart. We're also, you can see here, we've popped. It looks like we are reaching a level of resistance, though, right there of 79.94. So be careful here. It could pull back, but if it breaks through, then expect it to continue. That's going to show more strength. The volume, as you can see down below, is increasing significantly. And let's look at the directional movement index, too. That looks very bullish, too. So when you see that green line moving up and the red line moving down, and the green line is above the red line, okay, and the white line, which is the ADX9, which represents momentum, is increasing. That tells us that the momentum is increasing to the upside. Alternatively, or inversely, if it's the opposite, so let me go back in time so I can show you a negative scenario for this, right? All right, let's go back. Okay, here we go. Right here, back in, it was around October 31st of 2024. A lot of negative things started happening. First, you can see price got under the Tenkan-sen and it got under the cloud there, right? That was negative. Over here, you can see that the negative DI line crossed above the positive DI line. So the red line was moving up, green line was moving down, and then the white line started to slowly move upwards right around this time right here. Look what happened to price. It continued to drop. Also, when the ADX starts moving up like this, when the green line is above, and then it starts moving sideways, that can give you an earlier, here's a little tip, a little earlier signal that things are starting to, basically the momentum is starting to come out of this. move. And you can see that big decline right there. Okay. So that's really interesting. And the same thing applies, by the way, if the momentum is increasing and the red line is above the green line, if it starts to decline like this, that might be considered more of a buy point or a time to exit your short. If you were shorting, I wouldn't be adding here because you're under the cloud. But if you were shorting, that's the time to get out, in my opinion. All right. So that's just a quick little thing about the directional movement index. There's usually a lesson in any of these videos that you guys watch. So that's why you should go back to all my videos. Check them out. You'll learn something. EEM, emerging markets. Okay, I like this one too. This is a great ETF. I mean, it's a beautiful chart on the weekly chart. Okay, once it emerged above the cloud right there, you can see that it's moved up 24% since May. All right, 2025. So emerging markets have been doing pretty well. On the daily chart, we are still above the cloud, above the moving averages. Chiku span is still above price. Everything looks good. You know, it looks okay to me. General Dynamics Corporation, aerospace and defense, starting to show some strength once again. Now, I added the position back here on October 21st on that one. I'm still holding that position. All right, that's one of the stocks, for example, that you would find in my members-only portfolio. And this is what it looks like on the weekly chart. Let's look at 3M. 3M Industrials on the daily chart, it's above the moving averages. It looks good here on the daily, and it looks good on the weekly. PH looks good. Parker Hannifin Corporation, industrial sector. Look at that one on the weekly chart and on the daily. Looks good. Okay, there's a future cloud. You want that Senko span A and the future cloud to be above the Senko span B. Sometimes if you notice that my chart is, if it's really close up like this, you're not seeing the entire cloud. I do have to like move it out so you can see like the Senko span A. It's always going to be 26 periods into the future. Okay. And if you like the software that I'm using, it's called TC2000. There is a $25 coupon on my site under the description section of this video. So make sure you check that out and check it out. Anyway, PLTR, Palantir is looking good. Okay. There's the daily chart above the cloud. On the weekly chart, also looking pretty good here. I like that one. PSX looks good on the weekly chart. Look at that, popping above. The cloud has become bullish. ADX is moving up. Daily chart looks good too. RTX looks good. I like RTX Corporation. That's the industrial sector. Still in a strong uptrend on the daily chart and the weekly chart. Trading shouldn't be complicated, folks. It should be very simple, very easy. The more you analyze, the more you're gonna basically, I call it analysis. Too much analysis causes paralysis, basically, right? You want to have a simple strategy, a simple way to observe what's happening. And the Ichimoku does all that for you, in a sense, because it shows you a very clean way of looking at the strength of a trend. As you'll notice that when we look at these negative stocks down here below, some of them that aren't looking as good, I'll explain why. Okay, so Exxon Mobil, here it is. I added this one on November 7th. Let me show you and I'm still holding on to that position. It looks a little bit toppy here. I'm gonna have to be watching this, and I will share my trade if I get out of this again in those posts. So consider becoming a member. APTV, Aptiv, Auto Parts. Now here's where things start to go negative. Okay, this is why the rest of these stocks. All right, it was just basically out of that list of 24. It's just 10 stocks that I would recommend. APTV, Aptiv, Auto Parts. As you can see, we've got a series of lower highs here. Okay. And notice how the Ichimoku cloud has helped us in identifying this as well. You take away the Ichimoku, I mean, you can still use traditional technical analysis, but this just makes it so much easier. At a glance is what Ichimoku stands for. So what you see here is the Chiku span is underpriced. That's negative. You see the green line, Tenkan-sen, is under the Kijun-sen. That's negative. Price is under the moving averages here. It's still inside the cloud, but it's starting to show negativity. If you look at the Senko span A, that's crossing under the Senko span B. I don't know if you can hardly see it right there. It's starting to cross under. If you look at the directional movement index, that the red line is moving up and the green line is about to basically, cross. So that's also negative. So when you start seeing all this negativity, is that the time that you should be jumping in? I disagree. I don't think that's correct. You want to look for the positive things that are happening. You want to look for price to be emerging out of the cloud, coming out, right? Less turbulence. It's like a plane. If it's flying inside the clouds, there's going to be turbulence. If it's underneath the plane, it's also negative, right? You need to get above for a nice clear pathway, right? And that's what we have. That's what we had with APTV. Right now, it's starting to show some signs of weakness. And if you look at this trend line here, for example, and then you look at this other trend line, you see how that trend line is accelerating to the downside now? So it was moving down slightly, right? Now all of a sudden, this thing looks like it's starting to break down a little bit more. All right, let's keep going. Broadcom, AVGO, under the moving averages, but above the cloud. So I'd stay out of that one for now. It might look good on the weekly, though. On the weekly chart, it's under the Tenkan-sen. So it's not the right time to get in, but it's not a terrible looking chart. AXON has entered the cloud on the weekly. On the daily chart, you can see it's in a series of downward, it's in a downward channel. Okay, not looking good. CMG, here's another one. I'd stay out of that one. Very difficult. Once the stock is out of favor and there's not a lot of interest, the price just continues to drop and drop and drop some more. Okay, so I was talking about this not just recently. You may have seen that video where I talked about CMG. I actually made a box right there. When was that? That was on October 30th. Okay, not that long ago, 11 days ago or so. So I said, that's not a good sign. Okay, price basically was, got under. If you look at that tiny little candle there, it got under the cloud, and then boom, it gapped down, and then now it's been continuing to drop. CVS, up 3% today. Remember, the healthcare stocks are doing pretty well. Would I be jumping in right here? No, I'd wait until, again, we get some more positivity with the Ichimoku, but overall, I like what I'm seeing. On the daily, on the weekly, it looks strong. How about DEC? Decker's Outdoor Corporation? No on that one, under the cloud. DKNG on the weekly chart, under the cloud. No on that one. EL, which is Estee Lauder Companies. It looks like it's ready to emerge above the cloud soon, but it's not there yet. Okay, so I'd stay out of that one. ETN, under the Tenkan-sen on the weekly chart. Okay, stay out of that one for now. Here it is in the daily chart. You can see it's very stagnant and in a consolidation stage. Whoops, I just clicked on something by accident. Uh-oh. Anyway, we'll just keep going here. I can't remember what stock I clicked on. ETN, yeah, it's going stagnant here. PWR, okay, on the daily chart, it's under the Tenkan-sen, but overall looks good on the daily. Let's look at the weekly. Very strong on the weekly. So Quanta Services, industrial sector, this one might give us a buy signal as early as tomorrow if it gets back above the Tenkan-sen. So this is something to watch out for. SBUX, no on Starbucks. I think Stephanie Link said that she took a position on this. Now, from a technical perspective, the old school way, if you look at this, yes, this is a double bottom here. And after a decline, that can be positive. The problem is it hasn't cleared these highs here yet. So we don't have a buy signal just based on that alone. Secondly, as you can see, we have a declining 200-day moving average, that dotted yellow line, and we're still inside the cloud, so I'd stay out of that one too. That's the daily chart, and here's a weekly chart. It's not a pretty sight. And by the way, they closed a number of stores. I don't know if you guys have been to Starbucks lately. I used to go to Starbucks all the time. I pretty much, have given up on that. I like the coffee, but the environment in there is terrible. They used to have plush couches. It was some nice tables, some nice chairs. You felt, it's just they've changed it up so much, and it's just very I'm trying to think of a word for it. I guess it kind of lost its coziness level. One of the Starbucks I used to go to actually had a fireplace in it and couches surrounding it. It was really cool. And then they turned that into, I don't know, it just looks like a lunchroom, a place where people can sit down and just do work, and it's just not the same. Anyway, I just don't like it anymore. Let's keep going. Target. Here's another company that hasn't really been doing so well. Look at the weekly chart. She loves Target. Yeah, it could potentially bounce here because we've got a double bottom, but I wouldn't take that chance because it's still under the cloud. All right, stay out of that one for now. VRT, pulling back here. Vertiv Holdings, weekly chart. There's the daily chart. So on the weekly, it looks very bullish. On the daily chart, it has pulled back, and I'd hold off a little bit. Wait a little bit, because look at the directional movement index turned negative here just recently. And it's hard to tell what's going to happen here. The technology sector, as I just showed you, isn't looking as strong as some of those other sectors, down 4.68%. Okay. And then we got Apple, which looks pretty strong here on the daily chart. Popped right back above the Tenkan, got a blue flag. All right, that's the Mag 7 stocks, some of the Mag 7s, not all of them. That's the daily chart. There's the weekly chart. So it looks pretty bullish. Tesla, okay, still under that yellow declining trend line, down 1.26% today. Here's the daily chart. I'd stay out of that one for now. Meta, still in a decline here. I don't like this one either. It might bounce off that hammer, but you're taking a chance. I mean, we had a hammer there that was short-lived. It could be a short-lived little, move up. What could potentially happen is it could move up, hit the 200-day, which is right there, and then decline some more. So I'd stay out of that one. Microsoft looks like it's rebounding a little bit here, but it's still into the cloud. I'd stay out of Microsoft for now. And here's the weekly chart. So even that doesn't look particularly great yet. Okay, let's take a look at the next section here. We're going to only look at the strongest sectors. XBI is one of them, biotech. Popped above that 110.96. Yes, I'm sorry, this is a weekly chart. Let's look at the daily, sorry. So, and that's an old trend line. Wow, okay, I got to fix this. Sorry, folks. This trend line needs to be updated. The high there is 113.21. There we go. And we broke through it today. That's awesome. Up 3.56%. Volume higher. We had a positive crossover here. ADX looks like it might start moving up again. So the biotech stocks are looking pretty bullish. There's a daily chart, and here's a weekly. Okay. What about energy? Energy looking good too. Now it is under this trend line. Well, when I say energy, we're talking about a small ETF here called XLE, which consists mainly of around 22 stocks or so. It's a really small portion of the energy stocks. So this specific ETF, I would hold off on buying until it breaks above that trend line. But that's the weekly chart, and there's the daily chart. You can see how we created a shooting star type candle here today, and it looks a little bit like it's far away from the moving averages here. The cloud itself is just about to become bullish. I gave it a blue flag because it's starting to show all the signals that we're looking for. Chico span is above price. Tenkan-sen is above Kijun-sen. Single span A is just about to cross above single span B. Volume is increasing. So we'll see what happens with that one. Industrials, XLI looks okay. It's still above the moving averages, but it's been just kind of moving sideways for like a long time here. You can see that, right? Consolidation there. But it looks good on the daily, and here's the weekly chart. Okay, stalling quite a bit. XLK down 0.85%, pulled back, but held up above the 291.34, which is a daily level that I drew back from that level there. And it's still holding up above Tenkan-sen and Kijun-sen, so it does get a blue flag still, but it's starting to look a little weaker. XLV, healthcare, of course, was the winner. Winning sector, up 2.31%, popped above not just the 146.76 level yesterday, which gave us a nice little hint, right? If you saw the video yesterday, it talked about, hey guys, we're getting a buy signal here. Boom, takes off. All right, and now not only did it take off, and it didn't stall at that 150.32. That level is based on a weekly chart. That's why it's blue. So it's based on these highs right here, going back to like around March of 2025. Okay, so we're taking out those highs. That's really big, and because healthcare was kind of stagnant here all summer, and now it's starting to look a lot more bullish. It almost kind of looks a little bit like a cup and handle pattern. If you look at this, whoop, okay, there's the handle, and it got above. So I like that. Here's XLY on the daily. I like this one too. Consumer discretionary ETF. It's above the cloud. Looks good on the daily chart, and it looks good on the weekly chart too. It still needs to break through that 243.60. I wouldn't be jumping in here quite yet. Okay. I mean, if you do, you're your target's about 1.6% away, right? So, all right, the rest of these I'm not going to go into. I guess I'll just talk about a few of these real quick, like gold and GDXJ. That one's up 0.38%, but stalling at the Kijunsen. GLD stalling at the Kijunsen. Bitcoin down another 3.06% under the 200. Let's see, what else do I want to talk about? Silver. Okay, that one looks pretty strong. It's up 1.44%. I like that. SMH semiconductors. That one touched the 350.05. So it needs to bounce here off that 350.05, in my opinion. What else? XLB was up 1.04, but into the cloud. And XLP consumer staples showing some strength here, up 1.3, but it's still into the cloud. All right, now let's talk about these two stocks from our members' requests. WFRD, Weatherford International. Okay, this is an energy sector, which is starting to show a lot more strength. Oil and gas equipment and services. I like this one. You can see that it just broke above this high today. So that gave us another buy signal, right? So the first buy signal was right there where it got above the Tengen-sen. Now we got another one when it breaks above a prior high. So that looks very bullish. I like that one. Here's a weekly chart. The problem is that the weekly doesn't confirm what the daily is telling us, okay? So the daily looks great, and if you're just basing your decisions on the daily chart alone, you're not wrong to be doing it. I mean, it's been on a tear here since it got above the cloud. It's already up 52.33%. So maybe something like this that's a little bit more volatile and it has moved that much in such a short period of time, maybe you can trade that on a daily and then use maybe an alternative, shorter time frame, like a 2-hour. So you use the daily and the 2-hour so that you get a little bit more of a better, exit when you decide that you want to close out your position. But right now it's looking pretty good in the 2-hour there as well. So, but the weekly chart is not there yet. I personally wait for this price to get above the cloud as well. The positive thing is that the Senko Span A, if you look down here, right, has crossed the Senko Span B. That's huge for the weekly chart. And the ADX is going straight up. Overall, it looks good. I mean, we're in a nice strong uptrend right here after that very long decline. So it almost looks like a V-shape type recovery. FOUR, Shift for Payments Inc. in the technology sector. Hey, one of the stocks that was in technology was actually up today, 0.66%. Here's a weekly chart. What did it do today? Well, it came to the 200-day and crossed above it and closed above it. That's on the weekly chart. I'm sorry, I take that back. It has not closed above it. When we're looking at a weekly chart, we're waiting until Friday for confirmation of where this candle is going to be, right? It's only Tuesday right now. So on Friday, if it can close above that 200-day, that's going to be very bullish, and we might see it continue moving up. And it is still under the cloud, so I wouldn't be recommending buying this as a new position or adding a position here. But if you're managing this position, I would certainly be holding here and waiting to see if you happen to have a position here. Is this going to turn into something? Because on the daily chart, you can see these last 3 days, we had this bullish hammer right there, and price continue to move up. The only problem is that volume is declining, as you can see, and this is where you get into trouble if you're trying to jump into a stock that is under the cloud, because it can be short-lived, And if it did stall right there at the Kijunsen, but it closed barely above it, so we're gonna have to see some more strength here. Their next earnings are on February 17th, so that's a little bit a little far away, about a month from now. So that's going to do it for this video. Just a reminder, folks, on how you can access and become a member. Click the join button. And if you guys like the software that I just used, the TC2000 software, right next to the link here, if you click and 9 more links, you have to click on this. It doesn't look like a link, but if you click on it, this pops up. There's a description of my site, my channel, and there's a whole bunch of links here that you can look through. I have a Twitter page, Patreon page, and this is where you can get that 20. And by the way, if you guys are planning on traveling overseas, or if you have family overseas and you want to send them money, okay, or they want to send you money, this is the way to go. I use wise.com. So I have family overseas, all right, wise.com, and I use it. And let me just show you real quick a little bit about this company. I don't talk about it once in a while. It's just an easy way to send, receive, and spend worldwide. And you can get a credit card through them as well, and an ATM card when you're overseas. You can send money up to 50 different currencies very quickly, and they have really low fees. That's the key thing. When you compare them to other ways to transfer money, you can look this up. But if you do, click, if you enter your email and click get your gift here, I don't know if you can see that. When you do use it, it says here, you can always transfer more, but we'll waive the fee on the first $600 US. So that's pretty cool. So you can actually transfer $600 to someone fee free with this by using the link. All right. And what else, guys? That's it, I guess, right? That's all we're going to talk about right now. If you're a property manager, check out this free property management software, Inago. Okay. If you don't have a VPN, NordVPN is my favorite one. I would click this out and get 3 free months. All right. Very good. We're almost at 25,000, as you can see here. 24,800 subscribers. 1,561,000 views. That's kind of insane. Always shocked when I see that. So many eyes on my channel, which is good. Anyway, have a great rest of the night. I'll catch you all in the next video.